Good morning, everyone. How are we doing today? July 6th. This is your daily financial news and lots of stuff going on today. But before I get into the news, let me remind you that we have a goal. This week's goal is 120 thumbs up for all of the daily financial news videos. And as a thank you to that, we will do our fourth, maybe our fifth week of Q&A Saturday morning, 8 o'clock Pacific. So far, we've been able to do it. We hit 100, then we hit 110. I don't know about this week. Yesterday, which is July 5th, it is going to need some help. It is sitting at 78 thumbs up right now. So again, 120 thumbs up from July 5th through Friday, and you will get another hour of my time to answer questions. And if you don't know, there's a playlist with nearly 5 hours of questions and answers already there for you. Again, these are questions that you send in and I answer all of them. So if you enjoy that, you want to know what's going on, you want to ask a question, if we get 120 thumbs up, we will do that again. So first off, pretty strong open. I didn't know which way this was going to go. I was certainly leaning towards a positive open because if you remember the conversations from last Wednesday and Thursday, specifically Wednesday got all kinds of good news, but we kind of had a weak day. And then Thursday, we got the blowout employment number, which really tailed off into the end of the day. And you can go back and watch the videos. I was like, not sure what's going on there. My guess was people just didn't want to be long the weekend, which is certainly becoming a trend. And sure enough, they're back, and that is pretty good. So, the experts are back, the big boys are back, and I would actually tell you we are in a global rally now. Something I haven't talked about in a while is the Shanghai composite. It enjoyed a 6% pop yesterday. There yesterday, are today, if you know what I mean. So, lots of stuff going around the world. The biggest news of the day, at least for me, was yesterday Warren Buffett went shopping. Warren Buffett signed a $10 billion deal, it is $4 billion cash, and I think it was 5.7 in debt. Let's round to 10 billion. He is growing his footprint in the natural gas transportation and storage. I thought this was an interesting deal. When you really break it down, it is a classic Warren Buffett play. He bought something from a seller that clearly doesn't want it. Where is the company name? I didn't. Oh, yeah. Dominion Energy. Dominion Energy wants to be a clean energy and utility company. So what they needed to do is they needed to get rid of this part of their business. So again, I call that a don't wanter. And just like in real estate, some of the best deals I have done and I still do are from don't wanters. For example, a deal I did in the last 30 days, maybe 45 days now, was from an owner of 3 single family homes on one lot. He had it in contract at 225. The deal fell apart because of this health crisis. He reached out to me and says, "What can I do?" Long story short, we agreed to 175. So a $50,000 haircut because it was a don't wanter. That's what Warren Buffett did. In addition, you have to realize he is buying assets. He is a collector of assets. Yes, natural gas is cheap today. It is one of the reasons that Chesapeake has filed bankruptcy because it is so cheap. Warren Buffett has the balance sheet to hold on. We are seeing opening up across the country. We are seeing demand rise, which ultimately at some point when we burn off the excess capacity means prices will rise. So again, Warren Buffett has the balance sheet. He is not looking at this week, this month, or even this year's price for natural gas. He is playing the long game. So again, classic Warren Buffett play. Only $4 billion in cash. And last time I checked, I think he had $137 billion in cash on his balance sheet. So he's clearly got some more dry powder. But it is interesting to see him go shopping, right? It's always a sign for us value investors out there. Oh my God, Warren Buffett's buying. What should I do? So I think it'll be interesting to see what else happens. What else we got? Oh, Regeneron. Again, I think we're going to be talking a lot between now and the end of the year. I think you're going to see two themes. One, election nonsense and hate and he said, she said stuff. And two, we're going to talk about therapeutics and vaccines because that is really when we get this behind us. So Regeneron is moving into phase 3 trials starting soon. They actually have a couple of different avenues they're going down. And let's all hope one of these guys is the magic bullet and makes it go away. And then people have options to get it or not. That's the American way. So let's hope that comes out because that will be a clear sign to go shopping for all kinds of assets. Next up, Uber. I think we talked about Uber for a while because they were going to buy, I think it was Grubhub, if I remember right. They got snookered by a European company. They were kind of they were being played. There's no question they were being played. But they kind of got a little antsy, as I said they would. It's funny. You can go back and watch these videos. All these daily videos are recorded. I said when Uber lost that deal that they'd buy someone else just out of feeling like they had to kind of thumb their nose at Grubhub. So they bought Postmates. Postmates for $2.65 billion, all stock deal. They're going to have to issue 84 million shares to buy it. There we go. NASDAQ, man, again, another sign that, again, last week's kind of weak play was really a talk about the weekend. People were on vacation. The Wall Streeters were enjoying their Hamptons or whatever they were doing. Set a new record at the open. And pretty unusual, 10 to 1 up to down, advancers to decliners right at the open, which is kind of unusual. So that was interesting. Already talked about Shanghai soaring 6%. I saw an interesting data point in the article. It said Shanghai index breaks 850-day moving average. I've been doing this a long time. I've never heard of an 850-day moving average. That's more than 2 years. That's a hell of a moving average. But I guess if you break that trend line, it's probably a big deal, right? Because you've been building a solid base and now to go above it probably is a sign of more good news to come. Again, if you're new to the channel, I am not your stock guy. Don't ever listen to me about stock advice. But again, these are interesting things. And I do think it's a sign that the global economy is betting on what we call the Fed and the Treasury and stimulus. There's a lot of liquidity swashing around, and a lot of people in Shanghai are betting on their equivalent of the central bank easing even more and giving incentives, right? The Chinese government has an incentive today for electric cars, for example. So they see more of that coming. They want to have more internal consumption, right? If you look at the Chinese economy, one of their greatest weaknesses is they're still an export economy. So if over the next decade, 2-3 decades, they become even a balanced economy, watch out. That will be interesting to see. I did see a market bull come out with a number that was unusual to me. Jeff, Saut, S-A-U-T, never heard of him. The reason I bring it up is he is out there saying that he sees a 30% pop in the S&P inside of the next year, and S&P 4,000. That's a hell of a call, and it's kind of easy to see, right? His article only gave me the headlines. You had to pay to see it. I didn't want to pay, but the bull case is pretty easy. Q2, which we've left, is going to prove to be the bottom, the worst of the worst, unheard of numbers. Pretty interesting. More stimulus. More stimulus coming from us and across the world. And there's a gazillion people working on both a vaccine and, more importantly, therapeutics, right? To make, to have less deaths. So lots of stuff going on. And yes, I did just see a comment come across on an article that I saw where now Wall Street, right? Wall Street a couple weeks ago was saying, ooh, Joe Biden's bad because they're going to raise taxes. They're going to hurt the stock market, all of that stuff. There's an article out today. I believe it was Goldman. No, was it Goldman? I read 2 Goldman articles. Anyways, I don't think it was Goldman. It might have been JP Morgan. Came out and said, Joe Biden's not going to be that bad. Yes, there'll be negatives for taxes, which will hit earnings per share. However, Biden will be good, if not great, for trade with our third party partners around the world. So while he may impact Wall Street stocks and financials and all of that, which will be direct targets, and Joe Biden has come out and told them that, there will be beneficiaries from the trade side. So as consumers, or maybe if you're in the S&P index, it could be a wash. So, I was right. It was J.P. Morgan. I thought that's an interesting article, right? Because it's never black and white. I think if there is a change in leadership, there will be winners and losers. And as investors, we need to figure that out. Frankly, that's what we need to figure out with real estate, right? That's what this channel is. I talk a lot about the consumer, but it's because they're my competitor, really, right? So what would a change in leadership do for housing? Think about it, right? What would it do? First off, there's a chance that taxes change. There's no chance real estate taxes change if the current leader stays in place. But you have to at least fathom a chance where if new leadership comes in place, we have a huge deficit. Maybe there's tax changes. Maybe they have to go after the 1031 exchange as an example. It's at least a risk to consider, right? The other thing I think is very likely is there will be some kind of affordable housing plan, whether that's a goosed up Section 8, the new version, something. I think you will definitely see lots of money going towards affordable housing. And if you're in that space, that probably means asset prices rise. So these are things we have to think about, right? We have a date, November 2nd. There will be a decision, and that decision will impact us as investors and us, the consumers. So we should at least think about it. And then the last thing, I talked about this, I think Saturday, about the market moving news. The ISM number came out today. This is the service industry. And again, it's a month-on-month read, but expectations were for 50.1, so just over expansion. Blew it away. Came in at 57.1. Again, a single data point is nothing, but we are putting together a trend that says Q2 is the worst. And more specifically, April and May were the worst, and June was better than April and May. This number is off month on month, so it's a 57.1 compared to last month, but still expansion and a significant beat. Probably 13% beat. They expected 50, they got 57. So good news. So at the end of the day, remember, we need 120 thumbs up. If we want to do an hour of nothing but your questions, we need 120 thumbs up. And right now we have 43 people watching and 11 thumbs up. So not good. That's actually lower than normal. So do me a favor, hit that. Also remember, if you're new to the channel, I am doing a book report challenge for your kids. I want to encourage conversations between adults and kids around money, investing. If they are under 20 years old, they read it the month of July, write a one-page book report, they could be in the running to win $100. So far I've committed to giving away at least 300, and we will see where that goes through the month, because you never know. I've been known to give away more money. So again, let's see what's going on. Have a wonderful day. I have 2 interviews today, one at 8, one at 9. Exciting times. Take care of yourself.